everybody, and welcome to Thursday. The just got the shit kicked out of you hangover morning after a major, not even a boxing match, not even a brawl. That's yesterday was basically getting blindsided and getting jumped by about 9 people. So, welcome to Thursday. And let me tell you, as far as going ahead, it's not going to get better for a couple more days. I've got on here on screen what is called the 10,000 hour rule. Many of you might have heard of it. Many of you have never heard of it. It's a theory, it's a researcher behind it. 10,000 hour rule says good teaching matters, not just practice. It takes 10,000 hours of intensive practice to achieve mastery of complex skills and materials. Now, let's just work that out. You got 10,000 hours. Now, you only got 6.5 hours of trading from 9:30 to 4 o'clock every day. So that's 1,538 trading sessions, so they say. Now, you divide that by 252 because you get 252 in the course of a year. And there you come up with your number. It'll roughly be 6 years. That's only market hours. That's not putting in time to do your homework, anything like that. And even with all of your research and even with everything behind it, you are still not guaranteed that you are going to be right all the time, which is why I'm traditionally year over year right 210, 220 of the trading sessions of the 252 in the course of a year. And yesterday was obviously wrong. Dollar, that's where your move is coming from. This is your move in the market is the dollar. And I can tell you right now, without showing it, only leaving here the US dollar and the Japanese yen, you are extremely oversold on both the dollar and the yen, despite the yen being well above the lows from back there in the early part of May. Bring you on here to the screenshot I shared at the end of the day yesterday, the end of the day, which is the NDX, the NASDAQ 100 4-hour RSI, and you were at 99.09. Now, I had to go back and look at this because we've talked about this before, and it was back on December 18th. OPEX week, that was OPEX Friday, December 18th. And the Dow 4-hour was at 97.59. The SPX 4-hour RSI was the second highest dating back to year 2000, 24 years looking back at that. And that was your highest that you had. Right up there at the end of 98s. This is again going back to, December. And here we are again on December looking at the image. We're up in the 96s. We're up in the 94s. Going back on December, when was this? December 13th. Didn't matter. And I start you off with the QQQ because that is where everything is at. And with the run that we've now had after this move yesterday from CPI, having already been on that move with these gap ups from the Jobs Friday and then the weekend after the Jobs Friday, 9.92% is where we've landed. And where we've landed is this 261.8 extension at 454.52, which is what I mentioned going back earlier in the week, going back a couple of weeks ago. We could get up here to 454.52. We were even looking at this when we were going into the end of March. Where it comes from, so that you know, is here your 1-2 at the very beginning of the bounce off of the October lows. Your 1-2, this being your 3, this being your 4, and this being your 261.8 right at 454.52. It fits. That's what it does. It fits. Is it exact? I don't believe that it is, only because of where we are, and I'll get to that in a minute. Up above, very, very plausible. We could get up to that 461 area. We haven't talked about 461 for a very long time. Very plausible that over the course of the next week, we could get to that 461 area. Very obvious everything that we've got going here for the last, let's call it 5 days alone, until we start breaking down below prior lows. This gap needs to move up a little bit more. Until we start breaking down below prior lows, with obviously yesterday's lows being the primary one, we have absolutely nothing to discuss about how far down we will wind up going. Although my bigger, broader, wider view has unchanged. I have zero changes in my view as to going out to June, July, September. Everything that I've talked about, everything I've focused on, zero changes. And here's why we talk about that. This is your bounce that you're in here. 1, 2, 3, looked very good, little dip, and kablam. That's where we're at right now over the last 20 days. Now, would you put your money here? And when I say money, I'm talking about money. In fact, the question I asked last night, would your father trade here? Or would your father be out here in June, July, August? I can't even move the mouse over that far into September, December. Where would your father invest? But because FinTwit and everything out there is all about your zero DTE and putting your money in a microwave and making money on it today, well, those are the results that you wind up getting. And these are your gaps. These are your gaps just going back to the Jobs Friday, the weekend after the Jobs Friday, and now obviously with CPI after PPI being a complete piece of shit, but it still worked out. So as we move on and we move to the other direction, I've come back here to the RSI. Now, this is the SPX that we're looking at here. And I've said it hundreds and thousands of times. On the overbought RSI, you could be overbought. It doesn't matter. But you get oversold, you are going to bounce. There is zero question about it. And as you see here, when we got extremely oversold going back to OPEX Friday last month in April, that was the reason why we took off the trades that we did, even though they were out to January, September, October, because you're oversold. No matter what, when you get oversold, you're going to get a bounce. So here's looking at that from this point of view as to your overbought. You're overbought here as we went into the early part of November. This was the FOMC meeting. There was your new moon. Overbought. Didn't matter. Come in here to December, which I was just showing you there over in the chat room about the alarms of being up in the 90s, 96, 97. New moon. Sell divergence. Didn't matter. Go into the beginning of the year, we got our little dip, oversold, boom. That's where we began this final run. And here, again, talking about the new moon, this is what I was saying when I was talking about that in the email yesterday about I do not like this. I do not like this, that the PPI on what was it, Tuesday? The PPI pushed above the highs that we already had. I do not like this. The reason I don't like it is because you don't have a new moon. Sorry, you don't have a full moon until May 23. May 23 is the day after NVIDIA reports earnings. So with that being more than a week away now, May 23 coming here on Thursday of next week, and the window of how you can go back and study on the new moons and full moons all you want on your own. It's an art, it's not a science, but 3 days prior, 3 days after, where that date is, you have a 99% probability that you are going to find the top or the bottom of where your move is currently on. You can go back as many years as you want to. You're going to see it. You're going to see it there. It's right there. It's right there. Every time you go and look back and you go over here to the full moons, have not updated the full moon chart, but same exact thing. You go to where your full moons are, you will find your tops and your bottoms 99.9% of the time. So this needs to be updated, and I'll update it accordingly as I get time for it. But very clearly, you can see here this trend line that we have coming off of the February highs of 2023, the July highs of 2023, where we were trending above as we were going into the April top, March top. We're right back at it. Pull it on here on a 1 minute just to see where that line is. There's your line right there. That trend line, as accurate as it may be, comes out there right to 52.90. Here's your 53.07, your 26.8 extension, 261.8 extension going back to 2016. Okay, so there is a lot involved with looking at this from a bigger, broader, wider view, other than just going out there and throwing out some day trades. So there's plenty to be said about buying yourself a little bit of time. But yeah, that's where everything has evolved to. And now that it has, like I say, this isn't over. This is no way, shape, no way it's over. Changing the view now with everything having broken above that level there, just over on the last day. The 52.64, 52.684.87 getting broken here. So what we now have is a 1A, 2B, don't know what it is yet, with a possible 3C being up here 53.64, 53.50. So 53.50, 53.64, highly likely where we wind up with over the course of the next week. This being the wave 3 that we're currently at, possibly 53.26, possibly, more than likely, and then a little dip. Only had a 40-point dip over here on wave 2. Wouldn't expect too much more than a 40-point dip over here on wave 4. Get a dip below this CPI gap, things start to get questionable. Get a dip and start breaking down below this previous low over here at 52.11, things start to become very questionable. So the issue with that is we don't have the full moon coming until May 23. However, going on to the SPX and where we have come from with the May 2 lows, 50.11, the May 15 highs, 53.11, this is a 300-point run, 300-point bounce off of the May 2 lows. This is now scrolling on up, moving up, 49.53.56, 53.11. Come on, do your math. So taking 49.53.56, the lows over here on April 19th, when, like I showed you, you were extremely oversold, Jobs Friday, or no, sorry, OPEX Friday, and coming into here to our highs that we have just placed, 53.11, 53.11.76 minus 49.53.56. We have a 358-point bounce, of which 300.71 has come during the course of this month, May. Look through your months. April, 300 points. 174 points over here in March, 251 in February, 248 over in January. Scroll on up into December. I don't even have it on now. Never mind. It's a waste of fucking time. The more important picture being here on our plus 1% day yesterday and the failure of, this is not 51.35, it was 52.50, 52.45, and it did not work. We broke above the safe edge. Like I said, the safe edges are not very reliable because we have such a compressed range. We did get our plus 1% day, and today is day 12. It is not a sound the alarm, ring the alarm for the SPX. However, quickly come over to the QQQ, and on the QQQ, it is an alarm. With today being day 12, since we have had a minus 1% visit. Minus 1% visit intraday. Today, minus 1%. Let me calculate it out. Would only be 448.37. Now, it will not be below yesterday's low. So it is very obvious, even if we were to get a minus 1% dip today, if we were, it would still not violate anything, would not even take out the previous day's close. So keep that in mind. Going back 11, we had earlier in the year, we had 12 back here in mid-December. Again, when we were talking about how extremely overbought we were, didn't get a dip. Got a dip a couple days later, but did not get a dip until later than that. And we come back here to previous runs. We had 18 over here in November of 2021, 2023. 18 sessions after we came off that bottom. Go back even further, we had 10. Go back even further. I know I had it somewhere because I was counting and I got disrupted. Anyway, this is going back to 2023, going back to the 2022 lows, prior to the 2022 lows. None of that shit matters because the algorithm has changed. So again, the alarm being today is 12 trading sessions since a minus 1% visit on QQQ. So focused in on 0 DTE, this is the kind of risk, a riskable amount of managing money can start using the data that is there and start looking to, if you expose yourself on CPI like a lot of us did and got ran over, this is a place to put in very small and recuperate. And I would not be picking the 448 strike. I would be looking somewhere like the 450 strike, considering how cheap the VIX is. Come over onto the IWM, nothing. Nothing. IWM closed 0.23 above the open. Nothing. Didn't fill the gap. Got a little gap over there on the IWM to fill. Didn't get down there to that 207. But again, nothing burger over on the IWM. So leaving you with that we are very, very, very likely still going to progress higher as we go into next week before we do get any kind of move into the June move. Where we're at as of right now is pretty clear. You've got a 2,000 point move over on the Dow Jones over the course of this month from the May lows. 5-day moving averages is as low as you're going to get, which means you are not breaking below the CPI lows. Come over onto the ES or the NQ, right back to the all-time highs, and holding the all-time highs all night long. This is coming back from earlier in March. 5-day moving average, that's as low as you're going to go, which means you are not taking out the pre-CPI. Come over onto the ES, same thing. Right back up to the all-time highs over there placed in March, holding right above it. Once again, 5-day moving average moving up, you are not taking out the CPI lows. And you come over here to the Russell 2000, which Russell 2000 is your weakest link, still better than 15% from the all-time highs from 2 years ago. Never attempting to get up higher than that. Fractionally higher than where we are right now is the 18-month highs. Week. You see these swings. You're coming back over here with the 5-day moving average being below the CPI lows. So Russell 2000 is your weak link. All the rest of them, you're stuck with the 5-day moving average. I will be around for the open going into the middle of the day, into the afternoon, and considering that there is nothing on the table and nothing to be expecting to the downside, we'll see how the middle of the morning goes. If we don't get anything aggressive and we wind up with a 20-point range, well, I'll just monitor everything from the tablet and I'll vacate myself from the computer. Have a good morning, have a great afternoon, and more importantly, smile. Sun shines out.
Oh, yeah.
This is aged urine. This is about 6 months. It's got that nice brown tint to it. And then, of course, oof, gnarly. Smells like ammonia. The research that I've shown is it's good for parasites, it's good for your gut microbiome. So of course we can drink a little bit and see what happens. But the way I like to use it ultimately is topically. So you put a little bit in your hand there, and then you just rub it on your skin.